please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Very good morning. Welcome to Chartbusters. Well, this is a show where we highlight all the buzzing stocks of the day. Monday morning, things have been quite volatile. We have started off in the green. We almost went into the red. And currently, we're still holding with gains of closer around 25 points odd. So pretty good going. After the big run we have had, Mangalam, well, the bulls will take this out of consolidation. At least we're holding in the green, but a lot of stocks actually from the broader markets that are moving around. We have, Network18, standard disclosure. Reliance is the owner of Network18 and TV18. And in fact, that stock is buzzing around. It's moved to the high point of the day. Future Consumer as well has spiked up in the last few minutes. And keep an eye on a couple of other stocks. Vindhya Telelink. I think we should get the intraday chart of that stock up. And it's not just today. Vindhya Telelink, let's pull up the stock. The volumes as well have spiked up on that stock. So you pull up that stock, it's up closer around 10% as we speak. And even in the last month or so, that's done very, very well. And when you're looking at Vindhya Telelink, you always look at the group company, and that's Universal Cables. That stock as well should come up for you in the screen. That as well was trending higher with a bit of a volume spurt as well on that one. So Vindhya Telelink is up 8%. Universal Cables, that's normally the stock you look at. When Vindhya moves, you see Universal Cables running behind it. So that's the other stock that should come up for you on the screen. It's up 5%. Not sure whether that's the circuit limit for it.
Absolutely. Individual stocks buzzing, Nigel, for the markets. You said, the bulls will take 25 points on the Nifty with both hands. And if you take a look at the Asian markets, they've extended their cuts. So the Nikkei was lower in trade as we, in early morning, we saw cuts of about 0.5%, 0.6%. And right now, it's almost closing in around 0.7%. The Shanghai as well as the Hang Seng are down about 1%. So the Asian markets, they are extending a fall. In that regard, we're doing fairly well with a green tick on our market. So first up, all the top stories that we're tracking at this point in time. And then we get back and chat with a couple of managements. First up, the Lal Street starts the week on a positive note. The growth engines fire on all cylinders as far as the GDP is concerned. The first quarter GDP at 8.2%, highest in the last 8 quarters. Robust growth in agriculture, manufacturing and construction drive the economy.
And Wipro surges on news that it has completed the acquisition of Allied HR Services for around $117 million. Analysts expect an annual run rate of around $150 to around $160 million from this particular deal.
From the Motown, mixed sales for the month of August impact auto stocks in trade. Maruti and Eicher miss estimates. Maruti lower, but Eicher throws caution to that wind, up higher. While Ashok Leyland and Bajaj Auto post a good set. Ashok Leyland up 4%.
And Balkrishna Industries falls in trade after the board approves capex plan of up to $100 million for setting up a greenfield tire plant in the United States. The capex plan is in addition to the current capex plan that's already underway for its carbon black plant. The street clearly doesn't like this aggressive capex plan. Okay, all right. Well, the Nifty is holding on to that slim 30-point gain odd, but I think a couple of stocks that you should be looking at from the broader markets. HCC, suddenly that stock has seen a bit of a jump up. I remember the stock trading in the red. That's done a U-turn of sorts, so I think we should pull the intraday chart up over there. Arvind as well, that's moving higher with some volume, so keep an eye out on that stock as well. It was more or less flattish. Now it's moved to the high point of the day. Keep an eye out on these couple of stocks. How do you trade the Nifty, though? We're up 30 points hard. Should you be buying into this Nifty after the big run that you have had, or is it time where we see some profit taking? Ashwini Gujral joins in. Hi, Ashwini. Good morning. Nifty is holding still with a gain of around 30 points. Nifty Bank, meanwhile, is doing a relative underperformance. How would you trade these two?
So it's an interesting scenario where, everything else around the world is down, but IT and pharma is taking us higher. You have these large premiums, and if we get lulled into believing that we are different and, decoupling, etc., and, something comes off, all these long positions will get stuck. So my opinion is that if we had to break out, we would have broken out of yesterday's high by now. What's happening is that the Bank Nifty is negative. IT Pharma have already run up but cannot take the Nifty beyond yesterday's high. And we are sitting on a large premium. So it's quite possible that the banks start to face the heat because the Nifty is now not able to maintain higher levels. And finally, you give up gains even on the financials. So I would still be short on the bank nifty, keep today's high as a stop. And I would think that these large private banks will start giving up ground the moment Nifty tires out, which it is doing. So for the moment, today is a good day to trap bulls. Good news, market higher, etc., etc. But overall, the macro situation and global markets not doing so well. So I'm going with that. Individual stocks, BEL is a sell with a stop of 115, target of 107. Piramal Enterprise is a sell with a stop of 3150, target of 3020. And Tata Elxsi is a buy with a stop of 1440, target of 1485.
All right, Ashwini, fair point there. A couple of questions. Then, at the start you said that pharma is doing well, and as we speak, Dr. Reddy's, that one should come up for you, is up around 4% at the high point of the day. So if one was a compulsive long taker, would Dr. Reddy's be on their radar? And secondly, Titan. It's been in a range, and currently as we speak, it's gaining some traction from the lower end of that range. It's at the high point of the day, around 907 odd rupees. Do you think good to go closer to that 1,000 mark again?
See, if you have to use, if you want to go long, I think Dr. Reddy is a better idea because there is some sort of correction which has already happened. Plus, there is some tailwind that pharma has. Titan maybe, Diwali play, etc. But it's already run up all of last year. So if I have to choose between the two, I think Dr. Reddy is a better buy, and where you could get probably over time 2800, 2850.
Ashwini, normally we have a bit of a lighter moment on Friday in terms of some of those alcohol stocks. But today, actually, I'm talking about a cup of tea. McLeod Russell, the stock has been a big underperformer. But in the last month or so, there is expectations that tea prices will move up given the kind of floods we've seen in Kerala. Now, that stock is again moving higher in today's trading session. Do you think the stock is good for more, or you believe that, in fact, it's done its move?
Today is the time of branding, and probably it hasn't gone up ever in its life because it doesn't have great brands. So after you do tea, you probably get into a Tata Global, which is already also corrected.
Right.
But this one is, near basically 52-week lows. You have, $10 rally. I don't think that's enough to justify buying it.
Okay, all right. Thanks so much for that, Ashwini, for joining in and giving us those details. Keep an eye out on another stock, Hikal. I was just looking at the large trades. I think our ticker team as well should get it up for you on the screen. Hikal, H-I-K-A-L. That's the stock that we're talking about. More than 3%, I think, rather large trade is what we have seen. The stock, as it is, has had a big run in the last week or so, or last month actually. And now, in fact, the stock is up 11%. But keep in mind, there's a large trade that took place just around 10 minutes ago or within the last 10 minutes. And that explains why there is a volume spike on that stock. Our ticker team as well should put out those details.
Let's take a look at that chart for the last 1 month. The stock is up around 20% in the last 1 month. And if you take a look, 27% as we speak. In fact, the big jump came in after the stock, entered the additional surveillance measures move on August 7th, I think that was. So since then, it was up about 20%. Last 12 months, 162%. And if you extended that chart from April 2016, it would have given you returns of almost 600%. So what is happening in the industry and what is the outlook for the company itself? We have the man himself, Mr. Dilip G. Piramal, joining us from his office on the show. Thanks a lot, Mr. Piramal, for joining in. Over the last 1 year, last 2 years, one would say, the passenger traffic has increased. The share from unorganized has come to organized. And then you've had the launch of premium offerings for VIP itself, along with Skybags as well as some ladies' handbags. So let's talk about the future of your company. The first quarter, you did a revenue growth of 30%. The last year, you did about 12.5%. On that note, what can you end FY19 with in terms of your revenues as well as margins?
Well, last year was a very sort of uneven year because of the GST introduction. So like several months, the sales were impacted adversely, and then in some months, they were very positive to take care of the previous month's adverse effect. So the base effect this year is quite uneven again. But I think we should definitely have revenues of more than 20%. And our first quarter is the largest quarter, and that was very good. So we are on a very good start. And I like to be conservative in my outlook. I had given a long-term outlook for the first time at the end of our last year's results. I had said that we had a profit after tax of 32.5% for 5 years. The CAGR was 32.5%. And we will likely to do the same thing in the next 5 years also. So that is quite long term.
Okay.
And basically, I would like to stick to that.
Okay. All right.
And the outlook is good because, yeah.
Go ahead, sir.
Yeah, because, as you said, in the last 2 years, what has happened is that our Indian economy is doing quite well. And we were very positively impacted by the demonetization as well as the GST.
All right.
And we have definitely taken some share from the unorganized market. But I would also like to say that in a growing economy, and especially in products like ours, which are not very high-tech and which can be easily made by the unorganized sector, there is a very large unorganized sector. And as the economy grows, people move. When we say we take market share from the unorganized sector, that means a lot of people migrate to branded products. But also what happens is that as the affluence, economic power improves, then a lot of people who are not addressed, who are not in the luggage market, come to that market, and they enter this market through the unorganized sector.
Absolutely, absolutely.
So overall, the balance doesn't change too much.
Absolutely, absolutely, Mr.
So overall,
Perumal.
the balance doesn't change.
Absolutely, sir. We are with you on that point. It's quite interesting commentary that you're bringing to us. The big takeaway is that you're saying that 20% on conservative basis is what you'll do for this year. 2 points, sir, now, in terms of your margins. One is that crude prices have moved to above $77 on a per barrel basis. It's seen a big run in this year. Second point is that the rupee has weakened. Now, you import some part of your raw material, isn't it, from China? Could you tell us, sir, have you taken a price increase, point number one, and what's the sustainable margin we can look at going ahead? Go ahead, sir.
Let me add something. See, the rupee has weakened. It is not inherent rupee weakening. It is the dollar which has appreciated very much against all currencies.
True.
So the dollar has also appreciated against the Chinese, the renminbi, which is the Chinese currency, also known as the yuan. And so they get more money for their dollar. So we try and take advantage of that, and we are very large buyers in China in luggage. So we take advantage of that, and we say that you are getting more money for the dollar, so you should not increase your prices, and rather, so it doesn't affect us so badly, of course. Like in a 3-month period, if we have contracted in dollars, then if the dollar goes up, then we have to pay more. But over the long run, it's not so bad.
Right.
And but there is a price increase. There is pressure of price increase. But when in a growing market, you can take all this in your stride.
Okay, Mr. Perumal. Yeah, what?
Sorry?
What is the quantum of the price increase across the board, blended, if you could tell us?
See, it is our price increase is very diffused. We don't take a sort of one price increase on all our products at one time. We do it twice a year, usually in around April, around October. And usually it's between 3 to 4%.
Okay, all right.
So on an average, you can say it's not more than 3 to 4%.
Okay, so 3 to 4% is the price increase. Your shareholders will be happy. Maybe some of your customers will not be too happy then, Mr. Perumal. But you were telling us about,
No, 3 to 5% is not... 3 to 4% is not so, and we do it once a year, means for one product we'll do it only once a year, but our overall strategy is to increase prices twice in a year, but we don't do it for the same product more than once a year.
Okay, sir. What about margins? You said it's not such a big impact, this entire rupee depreciating. You explained to us how the Chinese currency as well is moving around. So margins of 18% plus, sustainable?
Well, ultimately, it is the volume growth which gives the margin, because when volumes go up, the gross margin is much higher, your overheads are the same. So that has the biggest impact. this cost increase, unless the cost increase is very sharp, is not as doesn't make such a big change as the volume increase. So once you get volumes in excess of 20%, then the overall margins remain good.
Right, Mr. Piramal, finally, before we let you go, if we look at your sales breakup, roughly 40% coming in from VIP, 30% from Skybags, Aristocrat and Alpha, another 20% and 10% coming in from Carlton and Caprese. Over a longer period of time, say 5 years from now, how is this mix likely to be?
Well, I think definitely Carlton and Caprese, which are very small, will increase. And Skybags is growing very fast. But we also want to, I mean, all our brands are good. That is the best point
so this
at this
mix
moment,
remains over a period of time?
all our brands are functioning very well. Well, I would like everyone to grow, so I'm not partial to anybody, any particular brand. They're all in different segments. And we let the market decide that.
And you haven't lost any market share in the last 2 quarters, right? Weekend, the TCS buyback details were out. Nigel joins us with all the details and a comprehensive wrap on what it means for small shareholders. Nigel.
Well, let's run you through first the broad contours of this particular TCS buyback. Well, we had most of the details. The 7.6 crores is the total number of shares they're looking to buy back. 2,100 rupees is the buyback price. And the total amount is around 6,000 crores that they're looking to spend. Remember, the 2,100 rupees per share, that's really the buyback price on. Now, those are the dates and the flow of events. They intimated the stock exchanges on June 12th. Yes, we want to do a buyback. After that, they had the board approval. The record date is in place. And the opening date of the buyback is on September 6th. And if you tender in, everything should be done by October in the first week. That's 2018 itself. Now, the pricing is important. Remember, when they intimated stock exchanges that, yes, we're going to be going ahead and we're going to be doing a buyback. At that point of time, the share price was around 1,800 rupees odd. So small shareholders, they said, well, we have a chance in here to make some money. So that's why, especially for small shareholders, we're going to just explain how the math works. If you had the shares on the record date, that's on August 18th, then you're eligible for the buyback. Remember, the earlier buyback price, the effective price, if you just adjusted for the corporate action, was 1,425. So small shareholders were very happy at the end of the first buyback. That's last year. They said, well, we made good money because all our shares got tendered in. But if you just look at it in hindsight, actually, the second buyback, that's the current buyback that we're talking about, the price is more than 40% higher than the first buyback price. But you'll ask, who is a small shareholder and how do I qualify if I'm a small shareholder? Now, on the record date, that is on August 18th, if you held 99 shares, the price, remember, was 2012. So you come under the 2 lakh category and then you qualify as a small shareholder. So the definition is very, very clear. And now, in fact, you'll be getting, those emails and messages from your brokers, whether or not you're eligible or you're not eligible. Out of the total buyback, 15% is reserved for small shareholders. That's around 1.14 crore shares out of the total, 7.6 crore shares odd. So how does the numbers really work? If you just move on, a small shareholder, if he had 99 shares, 43 shares will get bought back in this buyback category. Importantly, that is around 44% as an acceptance ratio. Besides the small shareholders, the acceptance ratio is less than 2% odd. So let's put the numbers then up for you on the screen and let's take a couple of cases. Case number 1, if you bought the share at around 1,850 rupees odd, 43 shares will get bought back, right, at 2,100 rupees. So your break-even point, that is the price that you should sell, that 56 shares should be above 1,658 rupees. Suppose you bought back at around 1,950 rupees. Then you should be looking to sell the remaining shares at around 1,834 rupees. So that's the break-even price that you're looking at. Very, very important. So you'll be making, if you went according to this, either you bought it at around 1,850 or 1,950, you'll say I'm making good money, 22,000 rupees odd. But remember, there's a transaction cost. Around 0.2 to 0.3% is what you'll be paying on both sides. So that's around 1,250 rupees, very, very roughly. Time value of money, if you put this 2 lakh somewhere else, well, you'll be getting around anything between 8 to 10%, very roughly. So that's a time value of money. That cost as well is around 5,000 rupees. And STCG, assuming you are going to be making, around 20,000 rupees approximately, 3,500 rupees. That's the total costing that you should be deducting from the profit that you're estimating. For bonus shareholders, please be very, very careful. If you got bonus, then your cost of acquisition is 0. If you're tendering in at around 2,100 rupees, then in fact the short-term capital gains will be around 315 rupees. So that's the broad math in terms of TCS shareholders. Keep in mind, small shareholders, you need to decide first whether you want to tender in or not, because you have the rupee tailwind as well. That's backing up TCS. Back to you.
All right, Nigel, thanks a lot for that. In fact, you spoke about the rupee tailwind, so let's get in another tech company which is higher in trade today, up over 2% on the back of a CLSA note post the analyst day yesterday. Rima joins in with details. Rima.
Yes, L&T Technology held its analyst day on the 30th, and after that CLSA has written a note giving us the key highlights of what transpired and what the company had to say. So CLSA says that the company has reiterated its FY21 revenue target of $1 billion, and that implies a 20% growth in their revenues and 15% on an organic basis. The CLSA believes that this growth guidance by L&T Technology is achievable given the growth momentum the company has seen and the differentiation. And growth can be achieved by scaling up its top 30 accounts, expanding its addressable market, as well as large deal wins. The company has also put out an aspirational EBITDA margin guidance of 20%, and that CLSA believes will be tougher to achieve, and it will need a combination of an improvement in utilization, an improvement in pricing, a more offshore shift, as well as IP success. All said and done, CLSA still reiterates a buy call on the stock. They've kept a target price of 1750, pretty close to where the stock currently is. Back to you.
All right, Rima, thanks a lot for that. Meanwhile, just keep an eye out on individual stocks. The Nifty is up around 25%, but it's beneath the surface where 25 points, I'm sorry. But beneath the surface, individual stocks, they're buzzing around. Tata Global Beverages at the high point of the day. Ashwini was just talking about branded tea plays, so that one should come up for you on your screen. HCC, that one's recovered a goodish 10% from the low point of the day, currently sitting with a gain of around 7-8%, higher end of today's trading range. That is HCC for you. Syntex Industries as well. Surprisingly, that stock is down 44-45% from the start of this year, seeing some bit of action from the lows and currently up around 7.5-8%. What's not doing well are the banks. So DCB Bank should come up for you. That one's at the low point of the day. Along with that, we have MRPL as well, which is at the low point of the day. From the